Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Donald Trump picks Ohio's JD Vance as his running mate, elevating the populist venture capitalist turned senator to the Republican presidential ticket. Jay Powell says second quarter data gives him greater confidence inflation is heading in the right direction, possibly paving the way for rate cuts. Plus, Goldman's profit surges as trading tops expectations, but the bank plans to cut down on buybacks to set aside more capital. It's just gone 8 a.m. across the Emirates. I'm Jumana Versace over here in Dubai. Plenty to get through on the show. It's quite a U.S.-focused show today with all of the news that's coming out politically, as well as some of those comments from Powell. But first, let's get you up to speed on how markets are reacting. And you can see that the S&P futures and NASDAQ futures are pointing to yet another positive session, 0.2 and 0.3% respectively. This after yet another record close yesterday for the S&P. We are seeing strong momentum coming in. This, again, as the markets digest some of the more dovish commentary that came out of Powell yesterday, seeming to imply that the bar for cutting rates has just moved a little bit lower. The market is now pricing in 27 basis points of cumulative cuts by September. So not just is a full cut priced in, but people are beginning to say, well, maybe they could surprise as soon as July as well. Two-year yields sitting at 4.44, and then the U.S. dollar seeing a bit of a bid as well. We're keeping a close eye on the U.S. yield curve here, too. 230s inching closer back towards more positive territory. This is where they're sitting at right now. So 230s at slightly, well, trading around the flat line. But as you can see, the theme has been one of bull steepening as markets start to price in further possibility of rate cuts this year in the front end of the curve, but then the latter end of the curve keeping some pressure on due to concerns about, again, fiscal trajectory, especially if we do see a return of President Trump, what that might mean for U.S. deficits going forward. So 230 steepeners seem to be back in vogue again, one of the reasons why that curve inversion seems to be normalizing. But let's also check in on how markets in Asia are faring this morning. Avril Hong is in our Singapore studio. And Avril, just give us an overview. How are markets trading this morning?
Yeah, Jumana, it's interesting. I think what's reflected in the 230s curve is also showing up in the Asia Pacific, where those dovish Powell comments seem to be supportive. But on the other hand, you have the so-called Trump trade and what that might mean for protectionist policies and economies in this part of the world. So that's seen as typically something that is not so supportive for Chinese stocks. The Hang Seng is underperforming. The Japanese equities are doing quite well, coming back from a holiday today. We're seeing the stocks that are tied to the economy outlook, that is the sector that is doing quite well here. Let's flip the board because I think that same theme also seems to be playing out in the currency space where, yes, we have optimism about Fed rate cuts. That's typically seen as a sign that we see reprieve for these Asia FX. Indeed, the EM gauge of them has been climbing until this week for this month. And we're actually seeing them turning tail, those concerns really coming through about what a Trump presidency could mean.
Yeah, indeed, that is the question, not just for Asian markets, but for markets everywhere. Avril, thank you so much. All right, Donald Trump has made his first public appearance at the Republican National Convention in Milwaukee with a large white bandage covering the right ear that an assassin's bullet pierced on Saturday. The former president entered to a standing ovation, walking into a box near his family to stand next to U.S. Senator JD Vance, who he tapped earlier in the day as his 2024 running mate. Vance earlier branded China as the biggest threat to America, underscoring the likely hawkish stance of their administration towards Beijing.
I think what President Trump has promised to do is go in there, negotiate with the Russians and Ukrainians, bring this thing to a rapid close so that America can focus on the real issue, which is China. That's the biggest threat for our country, and we're completely distracted from it.
For more on this, Bloomberg's John Harney joins me now. John, a lot to digest out of the convention so far, and it's only day one. But maybe let's just start with Trump's selection of JD Vance as his running mate. What does that tell us about some of his policy priorities into his potential next term and how he envisages the campaign?
Well, JD Vance is very much in the mold of Trump himself, a populist, very much in the right wing of the party. a skeptic about foreign alliances, as you just as we just saw in that Fox News interview, and at the same time, it does present a generational leap. JD Vance is almost 40 years younger than Donald Trump, and he represents a new group of Republicans who are coming of age. And although he's best known as the author of Hillbilly Elegy, about his hardscrabble origins in Ohio, he's also a venture capitalist and has very close ties to Silicon Valley, and where a lot of donors reside.
You know, it's interesting to see how many within the party, but also Democrats, how they've reacted to his appointment, and namely because, you know, there are other matters on the subject of Ukraine, for example. JD Vance has been quite outspoken that he is not supportive of continued military and economic assistance provided to Ukraine, in addition to many other policy initiatives that also might come up as a bit of a sparring point, not just with Democrats, but also within the Republican Party as well. So what has the reaction been?
Well, the Democrats started fundraising off the Vance election almost as soon as it was announced. But you're right, a certain cadre of more traditional Republicans who take the old approach, or what had been the standard approach to foreign policy, may likely be disappointed, and that would include someone like, say, Senate Minority Leader Mitch McConnell, a very prominent Republican, very much of the old guard. He, as it happens, was booed today when he appeared at the convention. But any objections are going to be muted because this is Donald Trump's party, and he picked his choice will be applauded no matter what.
Yeah, it seems to be the case, more so than ever after Saturday. Bloomberg's John Harney, thank you very much. Let's bring in Samy Chaar, Lombard Odier Chief Economist and Switzerland CIO. Samy, great to have you with us on the show. Look, I started off the show talking about predicted odds, and right now they're pointing to around 69% probability or odds of President Trump winning the next elections. What does that mean for markets, and are you beginning to actually put trades on the table to reflect that possibility?
Absolutely, Jumana. I mean, it's pretty clear since the debate, rather than since the assassination attempt, that, Trump is the base case. He's the favorite of that race. He's not ready to compromise. I think the choice of his vice president is very clear that, this is an ideology battle on which he's not ready to make any compromise. And it means America first. It means that he's going to go through with his strategy. That means being hawkish with China, with tariffs. And it certainly means some form of outperformance of U.S. assets. And this is what is reflected in our portfolios. Probably means that the dollar remains well bid. Certainly means that U.S. equities will continue to outperform European or Asian peers. And that is very clear from the America First stance from Donald Trump. This is what he's going to go after. No compromission here, and very clear. Unless something big happens on the Democrat side, it should be a base case, and it's pretty clear that this is going to favor U.S. assets.
Yeah, so it's going to favor U.S. assets. What about the shape of the yield curve this morning? One of the charts we were looking at is the yield curve, the 230s yield curve in the U.S. It's beginning to move back to positive territory again. It feels as though, while many think that, and we'll talk about Powell in a second, that the front of the curve will start to move lower, the back end of the curve could stay elevated because of these concerns about fiscal profligacy were Trump to come back. Do you think those trades have merit?
Absolutely. It does feel that the Trump trade is, as you've said, and as you've rightly said, is a steepening trade. I don't know how far it can go, but very clearly, under a Trump presidency, if tariffs are implemented, there is a direct link from tariffs to prices, and that at some point is going to limit and constrain the ability of the Fed to cut. Now, very clearly, the Fed is going to cut ahead of the elections, and perhaps might have a bit of leeway to cut after the elections. But if tariffs are implemented in that scale, in the scale that has been announced during the campaign, starting March 2025, we're going to find it difficult for the Fed to be cutting in an environment where, again, prices will reflect higher tariffs, which probably means some form of a flat yield curve, right? The long end probably acknowledging that, the fact that there will be fewer cuts. But then on the short end, we know that it's still going to be higher for longer.
Yeah, well, let's talk about what could happen with monetary policy, because Powell was speaking yesterday to David Rubenstein, and it seems as though the possibility of cutting rates, or at least the bar for cutting rates, has moved a little lower. Let's just listen to something that he said yesterday.
On inflation, in the first quarter we didn't make any more progress. The second quarter, actually, we did make some more progress. We've had now 3 better readings. And if you average them, that's a pretty good pace.
All right, so the markets are pricing in now pretty much 27 basis points cumulative to September, so even a possibility of them starting before September. Where do you stand on the rate cutting debate?
So we have 2 cuts in our base case, September, December. To be fair, not so long ago, we had 3 starting July. But after the setback in Q1, we had to postpone that cut. We shouldn't have postponed it, to be fair, because when we as Powell said, when we look at the inflation reading of the second quarter, pretty clear that they should be cutting right now. The question is, have they prepared markets enough? Don't they want to see perhaps an additional reading on inflation in the labor market before they cut? So September probably still looks likely, but it's pretty clear that conditions now are met for rates to be cut. What happens in 25 is another story, though.
As you articulated, because of some of those inflationary pressures that might emerge. So who knows, they might want to cut quicker and sooner based on politics, even though the Fed technically is independent. Last question, we are in the middle of earnings season. It's just kicked off. We've had some banks report. So far, what is your report card, and what are the signals that you're getting from the earnings season, and how is that going to affect where the index is trading?
Well, it's very preliminary, but what it tells you is that basically corporate America is in relatively good shape. Like the economy, it's not buoyant, it's not fantastic, but it's actually pretty decent. Companies are making money. What is not easy from here is the expected return that you might get in the coming, let's say, 3 to 6 months. Very clearly, from the earnings picture, from the valuation picture, from the rate picture, doesn't make it easy to have a huge expected return from here. And this is why our portfolios are very balanced between the fixed income component and the equity component. Maybe the second half of the year is going to be more about carry than it's going to be about equities. But this is still an environment where corporate America is doing okay. So there is no reason for us to be underinvested at this stage.
Yeah, makes sense. Samy, thank you so much for joining us today on the show. Samy Chaar, Lombard Odier, Chief Economist and CIO of Switzerland. Still ahead on our show, South Africa's newly formed government is pushing back against a U.S. Senate review of ties between the 2 countries. The details coming up later on this show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai. An Israeli drone strike near the Lebanon-Syria border has reportedly killed a prominent Syrian businessman who was sanctioned by the U.S. and had close ties to the Syrian government. Lebanon's Hezbollah says Mohammed Bar'a Katarji was killed instantly after a drone strike hit his car while traveling on a highway linking Lebanon with Syria. The strike also came as Israel and Hezbollah have been exchanging fire on an almost daily basis since the start of the Israel-Hamas war in October. So for more on this, Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingston-Wallace, joins me now. How should we read the attack on the Syrian businessman yesterday?
I think fundamentally it's a reminder, and it's a reminder that while everyone is focused on Gaza, everyone is focused on the ceasefire and hostage talks, Israel is operating across multiple theatres. And that the takeaway from that is fundamentally, even if you get a ceasefire in Gaza, even if you get the release of the hostages, even if you get some sort of plan for the post-war Gaza, which is a little bit up in the air, that doesn't fundamentally solve the problem in the region.
Yeah.
They've got fronts in Lebanon, in Syria, in Yemen, in Iraq, and on it goes.
Is this likely to flare up tensions again on the Lebanese border? I mean, it feels as though the situation was a lot more tense a couple of weeks back. Since then, it's kind of calmed down. I don't want to say completely calmed down, but the intensity has slowed down. And yet again, now we're looking at a situation where Israel have gone for a very surgical strike, this time after going after a businessman. Is this likely to lead to an escalation once more of the tensions on the Lebanon border?
I think fundamentally the narrative is the same that it has been for months, which is that, ultimately I don't think Hezbollah wants a full-scale war. It's got too much to lose. On the other hand, it's got this entire border area that's, you've got a lot of people that have had to evacuate. Same on the Israeli side. And again, once Gaza is over, the pressure on the government in Tel Aviv and Jerusalem to do something about northern Israel is going to be intense. And that fundamentally leads you to a scenario where they're going to have to recreate that buffer zone.
Yeah. Stuart, I want to pull you in a slightly different direction, still within the region, of course, something that we haven't spoken in a while. But it seems as though those Houthi attacks have started to pick up again. Yesterday, reading about U.S. Central Command forces destroying 5 Houthi vehicles over the Red Sea. So, this is a story that isn't going away either, but perhaps we're not giving it the attention that it warrants.
Yeah, absolutely right. There was a big spike up last month, and that's continued into this month. And again, because it's been going on for so many months, people tend to sort of ignore it, and because it's happening at sea, people are ignoring it. The reality is, in terms of the global impact, you've got something like 90% of global trade by volume, not by value, moving by sea. This is one of the choke points in the world. And if you're getting a lot of traffic having to divert around Africa, costs are going up. In a scenario where every central bank in the world pretty much is looking at inflation and saying, what is that going to determine in terms of our interest rate decisions? The fact that you've got so much trade being diverted and at such a high cost fundamentally is going to feed through, and that definitely should be part of the calculus for thinking about interest rates going forward.
Yeah, and it doesn't seem like these Houthi attacks are being thwarted. They just keep going. So it is something that we need to keep on our radar. Stuart, thank you so much. Bloomberg's executive editor for Middle East, North Africa, and Russia, Stuart Livingstone-Wallace. Also coming up, Goldman plans to cut down on buybacks after the Fed's annual stress test required it to set aside more capital. More analysis of the U.S. big bank earnings next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Goldman Sachs is the latest of the U.S. banks to report earnings, with its trading unit and capital markets business helping to drive better than expected results in the second quarter. CEO David Solomon told analysts the U.S. economy remains relatively constructive.
On the one hand, there's a high level of geopolitical instability. Elections across the globe could have significant implications for forward policy, and inflation is proven to be stickier than many had anticipated. On the other hand, the environment in the U.S. remains relatively constructive. Markets continue to forecast a soft landing as the expected economic growth trajectory improves and equity markets remain near all-time highs.
However, advisory fees missed and the bank plans to curb back buybacks. Morgan Stanley and Bank of America report today. Let's bring in Matt Ingram from Bloomberg Intelligence. Matt, maybe let's just start with Goldman. Lots in there, namely that capital markets activity, trading activity has picked up. And even though investment banking has picked up, Goldman seems to have missed on fees. What is the read across to other banks from what we found out from Goldman Sachs yesterday?
G'day, Jumana. It's great to be on. We work very closely with Alison Williams and her team in the US banks organisation, so it's great to be able to share our views. Look, yeah, you're right. Trading income and also investment banking income were very strong, not only for Goldman's but across the board. As you mentioned, advisory fees were weak at Goldman. I don't think you should take that as a weakness in the franchise. In fact, on the contrary, as Alison said last quarter, Goldman are much more focused on franchise clients. And by nature, then, that's going to be lumpier. Goldman reiterated they have a very strong pipeline in advisory and M&A, and so we think that's going to flow through to Goldman's second half. As far as investment banking revenues, both equity and debt capital markets businesses were very strong across the board, and that should flow through not only to the second half, but also to the other banks yet to report. We've got a pretty low bar from last year, but we think that's a good sign heading into the second half. Regarding capital, as you said, Goldman telegraphed that they're probably going to cut their buyback. That's most likely linked to the stress tests from the Fed. Otherwise, those capital's very strong across the sector. The other banks that have already reported, JP Morgan, Wells Fargo and Citi, we think they can maintain their capital payouts into the second half. The sector is very well capitalised. The third thing that comes out of these results so far is margin weakness.
I was going to say, just on decapitalization, you know, it's been like 20 years now since the financial crisis. You still ongoing conversations with regulators, talk of increasing the amount of capital that banks have to hold, but banks are in a very healthy capital position. So how much of a theme is this becoming in this earnings season?
Yeah, look, it's a good question, and I think it's obviously an overhang in terms of capital, but the banks are well capitalised. Where we're seeing this hit this quarter is actually in expenses, particularly for Citi and Wells Fargo. We think they undercooked their investment expenses in the first half. They've got a big regulatory spend coming, and that's where this flow on from the financial crisis is yet to hit, that there's more regulatory spend coming, not only for Wells Fargo and Citi, but also perhaps for Bank of America, who are reporting later, as you said.
Which is ironic, of course, because Citi have been leading the gains so far in 2024. So on a look-ahead basis, something to watch out for. Matt, thank you so much for joining us today on the show. Matt Ingram from Bloomberg Intelligence. And, of course, keep a close eye on the results as they come out later for Morgan Stanley what is the other one? Morgan Stanley and another bank is reporting later as well. Bank of America, my producer is telling me. Okay, a quick look at markets as we head into the break. S&P futures, NASDAQ seen opening up in the green as we head into the U.S. session. After a strong session yesterday for the indices, another record high for the S&P. Euro Stoxx futures seen opening up slightly in the red, down 0.2%. Coming up on the show as well, as Donald Trump makes his first public appearance since the attempted assassination, Joe Biden defends his rhetoric against the former president in an NBC interview. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Donald Trump picks Ohio's JD Vance as his running mate, elevating the populist venture capitalist turned senator to the Republican presidential ticket. Jay Powell says second quarter data gives him greater confidence inflation is heading in the right direction, possibly paving the way for rate cuts. Plus, Goldman's profit surges as trading tops expectations, but the bank plans to cut down on buybacks to set aside more capital. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersace here in Dubai. Let's get you caught up on markets. A strong handover yesterday from S&P at another record high for the U.S. index. Strong session as well for NASDAQ, Magnificent 7, up about 2% yesterday in trading. Today, pointing to yet another session in the green. Two-year yield sitting at 4.44. We now have more than 2 rate cuts fully priced in by the end of this year. September has about 27 basis points cumulative priced in. So telling you that after Powell's comments yesterday, certainly the bar did get lower for these rate cuts and the possibility of rate cuts coming out of the Fed. Dovish commentary driving those interest rate expectations. And then the USD slightly firmer, this after the U.S. political news and the fact that Trump has chosen JD Vance to be his running mate. And of course, JD Vance is known for his very protectionist policies and has cited in an interview a short while ago that the biggest threat to the U.S. right now is China. So again, does build on that protectionist theme and hence why the US dollar is doing quite well this morning. In terms of market charts today, we're taking a look at the curve, the 2-year, 30-year curve in the US, and you can see that we are beginning to move towards a more positive trajectory for the yield curve. It has been inverted for a while now, but as you can see from the chart here, moving towards positive, and that tells you that as the market starts to price in the possibility of a sooner than expected or faster than expected rate cutting cycle out of the US, the long end of the curve remains under pressure as investors behave a little bit nervous or are a little bit nervous about the prospect of fiscal profligacy out of the next U.S. administration. So something to bear in mind there. 230s is seeing moments of disinversion is the title of that chart. But let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what are you watching out for this morning?
Yeah, Jumana, as we track those developments out of the U.S., I thought it'd also be useful to track what we're seeing in the correlation between U.S. and Chinese tech stocks. This chart here, courtesy of our colleague David Ingles, and it shows you the correlation between the NASDAQ ETF as well as Chinese tech ETF. It's turned negative. Essentially, it shows you that when these U.S. tech stocks hits record, the Chinese ones turn tail, but the reverse is also true, something to keep an eye on. Let's flip the board and take a look at what else is moving in the Asia Pacific today as investors assess what the pick for Trump's running mate essentially means for the EV sector and subsidies. We're seeing EV battery stocks in South Korea coming under real pressure today on a day where markets are in general quite cautious in the region. Jumana.
Excellent. Thank you, Avril. Also, really interesting chart flagged by David there, the divergence that we're seeing between China stocks, tech stocks, and U.S. tech stocks. Well, President Joe Biden defended his suggestion that Donald Trump should be put in the bullseye in an NBC News interview on Monday following the assassination attempt on his Republican opponent.
The truth of the matter was, what I guess I was talking about at the time was there was very little focus on Trump's agenda.
Yeah, the term is bullseye.
It was a mistake to use the word. I didn't say crosshairs. I meant bullseye. I meant focus on him. Focus on what he's doing. Focus on his policies. Focus on the number of lies he told in the debate.
Well, let's talk more about this once again with Bloomberg's John Harney, who joins us now. Earlier on the show, we were talking about Trump and the RNC. But let's talk about this Biden interview. Would you say he successfully deflected some of those Republican attacks following the assassination attempt?
Well, he's certainly trying to do that. But it took up a good part of the interview, which says something right there. He clearly wants the conversation to be on Donald Trump and comments Trump has made over the years that have been seen as provocative or inflammatory. But Republicans quickly pointed out this remark and some of the criticism of Trump that they say has made the whole situation worse and even encouraged violence.
Yeah. How does the assassination attempt over the weekend, again, remove the pressure or the conversation swirling around President Biden and some of the calls from some Democrats within the party for him to step down?
Well, it's gone underground, at least for the moment. We'll see what happens in the next few days with polls, et cetera. The president will be out in Nevada later today to address an NAACP convention. Nevada, of course, is a battleground state, and the African-American vote, which was strongly behind him in 2020, is essential to his re-election. But again, questions about his stamina and misgivings among Republicans after his his disastrous, that's the word is often used, debate appearance on June 27th was, there were so many questions about it that Biden grew rather testy and told Lester Holt, why aren't you asking about Donald Trump and the things he said? So it's still there. even though
very much so there. And of course, they need to make a decision by the time the DNC happens next month. What can we expect from the Biden campaign between now and then?
Well, I mean, he's pledged to get out on the campaign trail. Of course, the campaign essentially froze after the horrific assassination attempt on Saturday that shocked the nation and the world. But he insists that he wants to march forward, and he clearly, in this interview, he clearly wants to declare this rebellion, if that's what it has been among the Democratic ranks, to be over. But we'll see if that's true, if that's the case. Events, as we've seen throughout this election, have a way of surprising everyone.
Yeah, that's one way to put it. Bloomberg's John Harney, thank you so much for staying up late for us. Also coming up on our show, Saudi Arabia is climbing the ranks for funding across the EM venture capital space. We get analysis with Philip Bahoshy, founder and CEO at MAGNiTT, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Two ETFs focused on Saudi stocks have made their trading debuts today in Shenzhen and Shanghai. The funds will make it easier for mainland investors to further diversify their holdings internationally, particularly in a region that wields influence in the energy and oil sectors. For more on this, let's bring in Bloomberg's Felipe Pacheco. Great to have you with us on the show. First of all, let me just ask you, what is the rationale for launching these ETFs?
Good morning, Jumana, and it's good to be here. And I think that these ETFs that started trading in Shenzhen and also in Shanghai today, they are a clear example of how much efforts have been put by both sides, from the Saudis and also from the Chinese, to actually try to connect both markets, to try to give investment alternatives and also options for investors there in the Middle East, in Saudi Arabia mostly, and also here in Hong Kong, but also in the Chinese exchanges. Shenzhen and Shanghai are very, very important bourses within mainland China. And basically, these ETFs, they are allowing investors to, Chinese investors, to make their bets to actually build allocation in Chinese yuan, and they get information about those funds in Chinese directly. They can actually inquire, and then they can ask questions to those institutions that they are dealing with directly in their own environment. This gives a lot of possibilities for those investors that want to get to know more about the Saudi market, to build exposure to energy mostly. And this is what we see on the background that's being done by both regions, by both governments for a while now.
Right. Right, and I'm assuming that the appetite is there, otherwise they wouldn't have launched these ETFs. So, so far, how has trading been?
Jumana, I think it's fair to say that there's been some active trading today. We didn't see a lot of price change, but there's been trade with both of the ETFs in both different exchanges. And I think it's very fair to say that when you talk to the asset managers, to the companies that were behind the funds in China, but also here in Hong Kong, they say that there's a lot of work to be done when it comes to making investors familiar with those markets. And if we look at the options that Chinese investors have to allocate money in the Middle Eastern exchanges right now, I think Saudi Arabia is definitely the one that is getting closer to the Chinese investors. We had back in April, we had a gigantic conference here in Hong Kong that was aimed at facilitating those flows. I think both ETFs are a very, very good way for us to understand that this connection is getting a lot closer.
Yeah, and there's also, let's not forget, there's the Chinese ETF that trades on the Tadawul as well, so it works both ways. Felipe, thank you so much for joining us on the show today. Bloomberg's Felipe Pacheco. Well, speaking of, Saudi Arabia was ranked second for funding across the EM venture capital space in the first half of 2024, trailing only behind Singapore. VC data firm MAGNiTT says the kingdom's fundraising rose to $412 million over the period, making it the highest in the MENA region. The UAE came in second, with startups there raising $225 million, down 19% from a year earlier. Let's get more on this with Philip Bahoshy, founder and CEO at MAGNiTT, and of course, the author of this report as well. Philip, it's great to have you with us on the show. Look, one of the takeaways for me, high level, is that funding and deal making does appear to have slowed down. We'll talk about how it differs from geography to geography, but the high level takeaway is that there has been a moderation of activity. How does this region compare to the rest of the world?
Yeah, well, thank you very much for having me. Globally, we've seen a slowdown dating back to 2022. Post-pandemic, interest rates at 0%, liquidity was extremely high. Since then, we've seen this slowdown gradually that started off in the US, and the region hasn't been immune to that. Having said that, I think the positive signs are that things are beginning to pick up. If you look at the global landscape, according to publications internationally, it's the first time you've seen 3 successive quarters of growth in venture capital deployment dating back to 2020. And if you use the international markets as an indicator for this part of the world, the positive is that the signs are pretty much the same. So for us, we see this as an inflection point towards more positive investment trends into the future.
Yeah, I was going to ask you about the outlook for next year. And again, it's U.S. bank earnings season already coming through. Is that deal activity has started to pick up in some of these Western markets? Does that bode well for the markets over here as well?
I think so. I think that what the report basically highlighted is that early stage investment has returned. And that's the important deal flow for the rest of the funnel. Late stage is still very difficult, so those big ticket investments are harder to come by. But as long as you're building the bottom of the funnel, that is extremely positive for years to come in the future.
So let's talk about the intra-country divergence. It seems as though Saudi Arabia is leading the way on funding, but the UAE are leading the way on deal making.
Yep. So basically, many of the sovereign entities that are benefiting from oil prices are able to continue to deploy, whether it's through fund of funds here in the region, that then basically translate into venture capital investment. Both geographies have very strong government policies to focus on technology as a diversifier of the economy, and therefore they've become more resilient than other geographies.
Yeah.
And that capital deployment is key for the years in the future. And in Saudi, what was most interesting was it was the first time you saw year-on-year growth of non-mega deal funding of about 83%.
Oh, okay, so it is pretty positive then. I mean, you hear it, of course. It's good to see that the data backs up what we're witnessing and experiencing in terms of the IPO activity and all the deals that we talk about on the show. One of the questions that I have for you is, clearly there is a lot of interest in this region, and there's no shortage of funds that are moving here, looking to set up headquarters, etc. And I just, I feel like in the past, a lot of funds came here for capital raising. And I wonder to what extent the paradigm has started to shift and that some of these international funds are actually looking for investment opportunities in the region. They're not just coming here for capital raising, but also looking to deploy capital as well.
That's a great question. What we tracked was an increase of 130% of funds that have been set up in the region over the last 12 to 18 months. Naturally, that takes a little bit of time to actually deploy into the ecosystem because deals tend to take 6 months in the making. They have attracted international investors. We've seen the likes of General Atlantic making investments here in the region. Even if you go early stage, Antler and other accelerator programs have come to deploy. We naturally believe that the mandate to invest has encouraged many of those international investors to seek opportunities here in the region, but that will likely reflect in data in the next 6 to 12 months.
Yeah. And, when you talk about early stage VC investing, clearly the focus and the dream for all of these funds is to become a unicorn, so valued at $1 billion. How did the number of regional unicorns in the region compare to what we're seeing in the rest of the world?
It's a little bit difficult because the concept of unicorns can be paper, and you actually only have realized unicorns when someone's been acquired or there's an IPO. On paper, though, we've seen a doubling in the number of unicorns in the last 3 to 4 years. But until we start seeing late-stage activity pick up, we won't be seeing that translate into numbers.
Right, so it works across all stages of the cycle. Final question that perhaps is a little bit more personal to you. I noticed that BlackRock has struck a $3.2 billion deal to buy private markets data specialist Preqin, which obviously does provide data on private markets, private funding trends, very, very similar to your own. Why is it important to have data analytics companies like your own company in the market ecosystem?
Look, I think many people say that data is the new oil. And it's very difficult to quantify that. And the deal with Preqin basically highlights the importance of that data. A platform like MAGNiTT focused on private markets here in the region where data is opaque. It's very important to have credible, accurate data that people can reference for decision making.
Yeah.
And a deal like that really highlights the importance of that for not only here, but the global dynamics, like a company like Bloomberg.
Yeah, and certainly there's a lot of interest in the region, as we're seeing, and from the VC fund activity. Philip Bahoshy, founder and CEO at MAGNiTT, thank you very much for joining us. Also coming up on the show, South African officials are heading to the U.S. to lobby against a review into trade relations. We're live in Johannesburg. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. South Africa's newly formed government will use an upcoming forum on U.S. trade access to push back against a Senate review of ties between the two countries. Meanwhile, traders are holding bets on 2 South African interest rate cuts by year-end, though the Trump trade has potential to spoil a rally in the rand that is helping to move inflation closer to the central bank's target. So lots to unpack here. Let's bring in our Africa correspondent, Jennifer Zavizaja, who joins me now from Johannesburg. Jen, what is the South African government's plan for the upcoming summit?
Right. Jumana, good morning to you. I mean, just a bit of context here. As you mentioned, of course, we did hear earlier this year from lawmakers saying that they wanted to review ties between the two countries. What we saw from the U.S. House is that they approved this potential review of ties. Now it goes to the U.S. Senate. And the concern here really is that we could potentially see bilateral trade diminish between these two countries. And this is very important for a country like South Africa. The U.S. is the country's second biggest trading partner. Two-way trade between the nations amounted to more than $23 billion last year. And so we have a lot of business groups concerned about this potential review. So what we're understanding is that at this forum next week, we'll hear from South African lawmakers really trying to convince and press the Senate and U.S. lawmakers about the importance of trade between the countries, but also about the importance of the promise made under the AGOA Act, which was something that really enabled more economic development for sub-Saharan African countries. And so it will be interesting to see how this development really continues over the next few weeks and days, especially because the AGOA Act is under review for renewal next year.
Well, Jen, I mean, you've got to think that as the rest of the world, South Africa are watching the developments in the U.S. very closely, the possible return of President Trump, and indeed that's what betting markets are pointing to right now. How could that affect the types of discussions that are taking place between the U.S. and South Africa?
You know, I think you'd imagine that we're seeing and potentially seeing a lot of lawmakers globally really have to recalibrate what this could potentially mean for their own countries. And if we take a look at how markets have been reacting, especially in the EM space, that's pretty indicative of that. I mean, we saw the rand slightly weaken, of course, as we saw the dollar strengthening. And so, you know, there's that part of it. And then there's also the part of it when we think about the Trump 1.0 and really how relations between the African continent and sub-Saharan Africa and the U.S. Diminished a bit. And so there is a bit of concern potentially if we do see a turning of the tide within the U.S. government, what could that potentially mean for economic development and assistance? If we take a look at Trump's manifesto, his Project 2025, as he says, he does have a different approach to Africa and to development and security and aid in the region. And so it seems like at least South African lawmakers here are really making this a priority and perhaps are going to need to do a little bit more work, especially considering the developments over the weekend.
And just very quickly, Jen, you know, we've been following also the domestic politics very closely. Some stabilization in the rand coming through. What should we be watching out for in the South African economy over the next couple of months?
Right. So, Jumana, the big question is really when will we see the South African Reserve Bank start to cut interest rates? Prior to what we saw over the weekend in the U.S., there was an anticipation that we could see that later this week when the SARB does have their MPC meeting. Now, potentially, if we do see the rand sort of stalling in that rally that we've seen it over the past few months, potentially then the SARB has to hold on to their to rates at this point in time. So the big question will be, what is the communication that we get from the governor on Thursday when they do meet, and really how does the rand and other EM currencies continue to react to what is happening in the U.S.?
Yeah. Jen, thank you so much. And that was Jennifer Zabataja reporting from Johannesburg, keeping a close look at how futures are trading into the U.S. and European session. Looks like it's going to be another day of green. But that is it for Horizons Middle East and Africa today. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.